What's going on, guys? My name is Tyler. Welcome back to the channel, and let's go over all of the data you guys need to know when it does come down to the AMC mother of all short squeeze. We're going to go over the technical analysis, the Ortex data, the stock O tracker data, try to take a look and see if this gamma squeeze situation is likely to continue throughout the rest of the week or what to expect as far as that is concerned. We are also going to go over an interesting article briefly. There's a couple key things that I do want to bring to your guys' attention. So drop that like on the video, subscribe to the channel, turn on that notification bell, all that good stuff. But let's get into this video. So let's first talk about the technical analysis. And at one point today, we were up about 5%, and we did close trading down 0.68% in regular trading, down 1% currently in after hours currently at $43.52, which is not all too bad. Obviously, we've had great days. Yesterday was a phenomenal day, blew straight past $40, which is very, very good. But we're still up at these higher heights of even this first big candle that we did see yesterday, well above $40, like I did say. So it's not too unexpected this is going to happen. Really heading into Thursday, that's what I've been saying in all of these videos, is Thursday is really the testament, because Thursday tends to be our reddest day, down anywhere from about 4 to even 10% on Thursdays. Fridays tend to be red as well, but not as red, as you do see a lot of market makers, hedge funds, whoever it is that is doing the fraud, manipulation, and corruption. They want to get a lot of the calls out of the money coming on Thursday so they don't have to hedge for them on Friday. At least that is the running theory, and that is my opinion on that. But as far as potential downside, you're going to want to watch the $40 level. I don't think that's going to be the case, and it is very possible that we do have a strong bounce and we get another big green candle coming tomorrow. I think it's a little less likely than actually seeing that big green candle on Friday, just because Thursday is such a bad day overall. But watch $40 to the downside. We're definitely most certainly going to get a lot of support at $38.91, almost $39 if we do come back down to there. But I don't think we're going to be breaking under $40. To see a break under $40, that would be $3.52 to the downside. That would be a down day of about 9%. I don't think that is going to be the case. Now, as far as our resistance, we're going to want to watch these two candlestick wicks you guys can see right here at about $48.33, give or take a little bit of change on that. But you'll see a little bit of resistance right there. If we can break through that, then you're going to about $50. And in my personal opinion, $60 is still not off of the table. Coming on Friday, if we do have even a 25% positive day on Friday, that would put us pretty damn close to $60. If tomorrow is very red, then it's probably not going to happen. Really, tomorrow is going to be the telltale if that is still possible as far as a price prediction. Now, let's move on from this. Actually, first things first, before we do move on from that, look at the volume. 208.5 million for volume. So still another big volume day, and down a little bit from yesterday's volume. So we're going to have to see that big volume come back into the stock, at least more than what we did see today. And we should get a very positive day. If we see lower volume, we're going to have a negative day more than likely. Now, let's move into the stock O tracker data, because that plays into exactly what we're talking about in this potential move to the upside. So we do have a lot of in-the-money calls still at 98,816. Obviously, this went down a little bit since we do have a large concentration of calls at $45, which was knocked out of the money, but it was in the money at one point today. So obviously the hedge funds, institutions, whoever they are doing the fraud, manipulation, and corruption, like I said, they don't want to see an additional almost 25,000 calls at $45 go into the money by this Friday, because that controls alone 2.5 million shares, and they do not want to have to buy 2.5 million shares just to hedge and stay directionally neutral on these call options, or the back end of these call options that they did sell to us. So we do have out the money calls as well at almost 140,000, so still a big amount right there. But we're going to take a look back to the actual option chain to see where a lot of this open interest does lie. And as we already did say, at the 45, the 44, and at the $50 strike, you're also seeing a lot of open interest. 24,000 at the $50 strike, But obviously, a lot of this open interest is held at the $80 strike as well, about 30,000 worth. And for some reason, the 85, the 90, 95 are not loading on my screen. But you're not really seeing too big of an increase activity in the open interest. A lot of volume at this $50 strike, though, 175,544. So there was a lot of traders trading this $50 strike. A lot of people think AMC can at least go to $50 by this Friday, which I do think so myself. And also, just to support this rally too, there's a lot of hedge funds and institutions or big money that is placing big bets on AMC that expire on September 17th. So even if we don't see this move to, like I said, $60 by Friday, you're likely to see that move by September 17th. As we do know, we have a lot of margin calls that are going to be implemented coming on September 1st. And then also on October 1st, like I say all the time on this channel, we do have the bank reserve requirement ratios that are going up a lot, percentage points on percentage points, in between about 3% and 10%. 3% obviously on the lower end, 10% on the higher end. And that just means banks have to pull more money from their clients and bring it back into their reserves, ultimately raising the margin requirements for everybody. So that is definitely a good thing. One of the best ways to free up capital is to get out of your short position. So ultimately, you're going to have a squeeze effect possibly on the overall market, but definitely on the short sellers of AMC stock. So let's move on to Ortex. Let's see what they are telling us. 16.96% short interest percentage of free float, which would make sense. We won't know until tomorrow the exact estimate of what did happen for the wild day that we did see up 20% yesterday. But that would make a lot of sense that we are just under 17% short interest, because I did say a lot of smaller hedge funds and institutions aren't going to be able to stay in their short positions just because of the lack of liquidity they do have. People like Citadel, they're able to stay in short positions for a longer period of time because they have more money. So that overall just makes a lot of sense. And we do have 86.75 million shares that are currently sold short, with 17% short interest, and 86.75 million shares that are sold short is a very large amount. Do not be misguided by that. That is a very large amount still. But we do have the share utilization, the free flow on loan. All of these other metrics are pretty much the same. And something else I do want to say as well is return shares and borrowed shares. I don't even like to call that out in videos because it's just coming off the free flow on loan. It's not telling you how many shares were actually covered or sold short for the day. So keep that in mind when you guys see return shares, borrowed shares from the free flow on loan. Doesn't necessarily mean they were covered or sold short. So that's all you guys need to know from this. Looking very bullish. But the two things that I did want to point out in this article, it says meme stocks lifted by Wall Street as day traders stand down. And this is daily retail net purchases of meme stocks, US millions. And we do have AMC, GameStop, Bed Bath & Beyond, I don't even know what that ticker is. Rocket, Clove, Wish, Workhorse, Marin, Hood, and Naked. And obviously AMC takes the cake every single time. But it says, in quotes, despite the broad rally in meme stocks, retail purchases were mainly concentrated on AMC, with over 56 million in Tuesday's session. Vonda's Ben Otimbinda and I can't even say those names. All other meme stocks combined totaled a paltry 4 million in net retail buying. So obviously the majority of money is still flowing into AMC, which is definitely a great thing overall. Now, the other portion I did want to read to you guys, it says, this week's rally for AMC Entertainment and GameStop delivered another blow to short sellers. Investors betting against the par are down more than 1 billion so far in the past three days, according to data compiled from S3 Partners. That brings combined loss for the year to 10.2 billion for bears on the two companies, the data shows. That is a lot of money, guys. That is a lot of money to be losing on AMC and GameStop. A lot of that is more recently coming from AMC, obviously, but a lot as well did come from GameStop. So that is going to do it for this video. Still looking very bullish, looking for this rally to continue. Who knows what tomorrow will bring? That will be the the focus point of tomorrow is definitely going to be what tomorrow does bring, price action, and if we go up, if we go down. And then obviously Friday is likely to be a positive day in my opinion, but we have a lot of big money betting on AMC's rally into September 17th, so we'll just have to wait and see. But drop that like on the video, comment down below, subscribe to the channel, turn on the notification bell, all that good stuff, and check out the 3 links linked down below in the description. But that is going to do it for this video. I will see you guys in the next one.